Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to the India Market Outlook podcast. We released our outlook for October 2025 titled Is Value Emerging? Hi, I'm Vinay Joseph, the host for this episode of the podcast. First, a quick recap of how the second half of 2025 is panning out. Now looking at major asset class performance in H2 2025, till date actually paints a picture of caution for Indian assets, which has continued to be under renewed pressure amid multiple headwinds, geopolitical tensions, punitive trade tariffs, lackluster earnings growth, and FII outflows. Since the start of H2 2025, the benchmark equity index, the Nifty index, is down around 1% for Q3, with broader markets, mid-cap and small-cap indices down 1.8% and 4.9% respectively, all underperforming global equities. Moving to fixed income, the 10-year IGP yield is up around 18 bips, while the USD INR has continued to hit multiple all-time highs during the course of Q3 of 2025. However, in our view, value has started emerging. Now looking at the macro front, decisive policy support through GST and income tax cuts, front-loaded policy rate easing by the RBI, and benign liquidity conditions is likely to trigger a consumption-led growth cycle for the second half of fiscal year ending March 2026. In addition, corporate earnings cycle is also bottoming out, with upgrades likely to EPS in the coming quarters given what we mentioned on policy support. Further, Indian equity markets' sharp underperformance to peers has made relative valuations a bit more favorable amid light foreign investor positioning towards Indian assets. So overall, on asset allocation, in our assessment, domestic macro conditions have turned conducive for equity market performance, and we stay overweight on equities in foundation allocation. Nevertheless, volatility is likely to stay elevated in the near term, which highlights the need to be adequately diversified. So, we expect bonds to outperform cash, so bonds remains a neutral holding, and we see multi-asset strategies and gold as key hedges against downside risks. Within equities, we upgrade large cap equities to overweight on relatively better macro fundamentals and greater margin of safety in terms of both earnings and valuations. Within our opportunistic equity ideas, we retain our overweight on mid-cap equities given superior earnings delivery and better valuations. And within our sector strategy, we prefer domestic cyclicals, consumer discretionary, and financials, which is likely to benefit from the benign policy support, both fiscal and monetary. Now, bonds remains a cold holding as highlighted, and we expect the yield curve to flatten amid lower than average yield premiums, supportive monetary policy, and the resumption of US Fed rate cuts. In bonds, we prefer a more diversified allocation, and our only opportunistic preference is for high quality corporate bonds on steady corporate profitability and above average credit spreads. Finally, there are still risks on the horizon. Higher than peers trade tariffs, geopolitical tensions, and weak global growths are key risks which we continue to monitor. That's all for this podcast. If you like a copy of the report, please reach out to your relationship manager, or you can find it on our website www.sc/co/in or on SC Invest. Please like and subscribe if you find the podcast useful. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered relationship manager or visit www.sc.com/in.